Hi, my name is Aman and I'm a chartered professional accountant. In this video, I will talk about Canada Revenue Agency's arbitrary or notional tax assessment. If you fail to file the tax return to the CRA may guesstimate your income and expenses based on their own estimates and records and calculate the estimated tax, which will include significant penalties and interest in addition to the principal amount of the debt. As such, the debt will likely end up being significantly larger than the actual debt you would have owed if you had filed on time. That's what happened in a recent tax case, Eva Enterprises Inc. versus the Queen, which was decided earlier this year. The taxpayer, who was a truck driver, did not file tax returns for his trucking company for 2012, 2013, and 2017 tax years. Well, he claimed that he filed, but the CRA never received it. In May and June 2018, the CRA sent him a mail asking for him to file the corporate tax return for the missing years. But this never happened and the CRA did not receive the tax returns. So CRA finally issued arbitrary assessment for the years for which the tax return was not filed. The Canada Revenue Agency estimated the corporation's gross income in each of those years by studying the GST returns for the nearest calendar year. Then the CRA then deducted estimated 30% as reasonable expenses and the payroll expenses based on the corporation's payroll records. So the CRA estimated federal back taxes owing of more than $20,000 for the 3 years reassessed on the top of nearly $12,000 in failure to file penalties. You see, in order to object an arbitrary assessment, you need to question the assumptions underlying the CRA's assessments. So, the taxpayer testified that he kept in his truck the corporation's financial and tax data for 2012 and 2013 on his laptop. The taxpayer went on to say that in July 2018, he was involved in a serious truck crash while driving in the US. He went on to testify that he was unable to recover anything from the truck following the crash, including his laptop. However, the judge was skeptical that the taxpayer could not have recovered the laptop following the crash, either by calling the police or the towing company or anyone else on his behalf. So in the absence of the laptop, the taxpayer required some form of backup to explain his business expenses. The company did not use an accountant or a bookkeeper also. So the taxpayer testified that he kept invoices and corporate receipts at his Toronto home, yet he chose not to bring any receipts or invoices to the hearing, saying that they were in big boxes. Rather, the taxpayer created a one-page summary of revenue and operating expenses for the corporation's 2012 and 2013 taxation years, which he said were assembled using the corporation receipts and invoices. The taxpayer claimed additional expenses but did not provide reliable evidence to support those expenses. The judge was skeptical about the figures listed in the summary because fuel costs were precisely $15,000 and hotel and food costs were exactly $2,000 for 2012. The judge said these amounts appear to have been rounded up or down. It is unlikely that to reflect the actual invoices or receipt. It is more likely that they are simply estimates. But there was no way of knowing without reviewing the actual documents themselves. Under the Income Tax Act, anyone carrying on the business is required to keep records and books of account at the person's place of business or residence in Canada in such form and containing such information as will enable the taxes payable under this act to be determined. The judge stated that either such records did not exist, or if they did exist, they probably would have not supported the taxpayer's case. In the end, the judge concluded the Canada Revenue Agency use of arbitrary assessment was reasonable in the circumstances. Not only that, the judge also upheld the failure to file penalties, as the taxpayer was unable to produce any confirmation that he had filed his returns for the missing years or copies of any notice of assessments. If you have received a notice of assessment, I suggest you to file a notice of objection against the arbitrary assessment and also submit your factual tax return in support of your objection. Please note that because the Canada Revenue Agency will assess your tax returns with extra scrutiny, it's best to get it prepared by a chartered professional accountant. The CRA will then adjust your tax debt owing based on your factual tax return and issue you a notice of reassessment. I recommend that you stay on your top of your tax deadlines and you won't have to worry about interest and penalties, and moreover it can help you get the peace of mind and sleep well at night, which is priceless. If you want to be notified about our new tax stories, please consider subscribing to our YouTube channel. Thanks for watching and see you in my next video. Until then, bye.